Good Tuesday afternoon to you. Welcome to the John Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with one of my two co-hosts, Millard, taking a vacation again. Corey Edge of Edgerility. What do you know?
He deserves it. He needs
He
it.
does deserve it. He does.
Yeah.
Absolutely, he does. How are you, my friend?
I'm doing good. How are you?
Good. Doing good. Good. Surviving the heat.
Getting through the heat wave. Yeah.
Getting through the heat wave. Exactly.
Last week was super nice with the overcast and the kind of
I know. Yep.
mid 70s. Like, oh, I could live like this. But no.
Exactly. A little Southern Cal weather.
Yeah.
For most of the time, or the beach weather, I should say. Good 4th of July, first of all.
Yeah, very quiet. Didn't do much, which was great. I don't know if I told you, but you've been to my place over in South Reno, and we have 78 properties in this little, area, if you want to call it. So the 4th of July, everybody comes together. They do a parade. The fire department, and kudos to Washoe County Fire Department. They get one of their engines. They drive down. They throw candy to all the kids. That
is so cool.
Do it. So I've been doing that for years. Yeah. So yeah, it was really, and then a big barbecue for everybody.
Jeez, that's like the old days of the way 4th of July used to be, right? Neighbors coming together and.
Yeah, that was, and again, kudos to the fire department because they are always so helpful versus.
Yes. They're the best.
I guess you got me right off my soapbox at the end of the last show, so I'll jump right back on. Versus the people at City Hall will do everything not to help you. But the normal blue collar guys, the police department and the fire, like these guys are here to help. You need a cat out of a tree or a 4th of July engine. Like, hey, what can we do? When will we be there? But damn, you go pull a building permit and it's like talking to an insurance company. These people are horrible. Absolutely horrible.
The answer is no, first of all, right?
It's no, right when you walk. Like there's a big sign that says no. Like I haven't even asked the question yet.
Yeah, I know. I don't know what the answer is to that. It's frustrating because they're funded by taxpayer dollars and developer dollars and so on and so forth. And yeah, you just want to be treated like a human being, right?
Well, John, if I had $100 million and was building 1,000 houses, the answer is an automatic yes.
Right.
No matter what.
Right.
And not to go off on a tangent, but these are all the people moving here from other states to get away from the growth. So now anyway, whatever.
Yeah.
What are you going to do?
Yeah, what are you going to do? You're going to tolerate it. That's all you can do at this point. That's for sure. All right, my friend, let's turn the page. Let's get things started here. First of all, just coming across the headlines a few moments ago, missiles by the U.S. are now raining down on Iran. In retaliation, of course, I'm sure many of you heard, Iran fired missiles at about 3 ships. I thought it was 2, but now they're saying 3 ships, basically overnight. And so CITCOM just announced a few moments ago that they have launched a pretty strong retaliatory attack against Iran. We started to see oil prices move up pretty substantially towards the end of the trading session, finished up about $1.93. But yeah, in the after hour session and things like that, we saw it moving up in almost $3. So we'll see what kind of impact that has on the market tomorrow. But yeah, we'll continue to monitor that throughout the show and see if any other headlines arise at that point. All right, let me tell you what we have lined up for you. This is going to be a fun topic, Corey Edge. This is going to be a fun topic. So if you're thinking about buying your very first investment property, we have designed today's show just for you. Okay? Before you go out and you write an offer, before you go get a pre-qual letter from Dwight, before you do anything, Corey's created a list of 9 critical things that every investor should evaluate. So we're going to discuss things like, how do you identify a great investment property? Because like we've said over and over, Corey, it's a completely different animal versus going out and trying to buy your primary residence. We're going to talk about common mistakes that you see and how to avoid those. And then I'll chime in a bit on the building the long-term wealth through real estate, right? And so a lot of different things. But, Corey, I was really looking forward to this topic with you because you and I come across people all the time, you definitely more than me. They're like, yeah, I want to get involved in the world of investment real estate. I know I should do it. I don't know where to start. And most importantly, I don't want to make any mistakes. I can't afford any mistakes. Maybe I'm a couple years away from retirement. I can't afford any mistakes. So therefore, where do I start, right? Don't you wish you had $1 for every time you've heard something like that?
Yeah. And unfortunately, I think the not starting scares a lot of people away when that's kind of the hardest part is the starting. If you just continue that momentum of getting started, find a property, study the property. If it's the right property or not, purchase the property.
I think I may have asked you this, but I cannot remember for the life of me the answer. So I want to do it again. You personally, or for you and your group, do you still get butterflies in your stomach when you go buy a property? Not for clients, but for you guys?
Well, yes, certain properties, right? Because some of the properties that we purchase, sometimes we don't get the benefit of inspections. We don't get the benefit of title policies. I mean, we deal in a kind of a different world than some of the other ones. So the chances of a mistake are higher, and the chances of fixing the mistake are much lower, if that makes sense.
Okay.
So there's a lot of,
Higher
you
risk,
know,
higher reward, bottom line.
high risk, high reward, and we rely on, and I do a lot of it. We rely on the information and the data that I can find.
Sure.
Right. So yeah, so of course I get some butterflies because I'm human. If I'm wrong,
Yes.
it's not the worst thing in the world, but it costs a lot of money.
Yeah.
So yeah,
absolutely.
I get butterflies. And as far as just buying something and getting tenants and this and that, I think people make it out to be worse than it is. And you always hear, it's just like reviews for, an Amazon product or a resort, right? Like
Mhm.
the people that had a bad experience will always talk, but the good ones don't.
Sure.
But
Right,
by and
right.
large, the experiences are usually very good.
Yes.
So people have heard horror stories about buying rentals,
Mhm.
but you don't ever hear the good stuff.
No.
And the
not
good
very
stuff
little.
is, 9 out of 10 are good, one's bad,
Right.
and that's the one that
Right.
people remember.
Right. Okay. Very good. Yeah, I've always wanted to ask you that, but like you said, you're human. Of course you do.
Of course, yeah.
All right. So it's going to be a great topic. Top 9 things to look for when buying your first rental property. All right. Let's get the stock market side of things going here. And, it was a day, Corey, where the market wasn't quite sure what it wanted to do. We actually started pretty strong in the pre-market session on the Dow and the S&P side of things. Matter of fact, we're up over 200 points going into, actually almost 300 points, going into the opening bell at 6:30. We're up about 272 or so in the Dow futures. NASDAQs were just weak throughout the morning. They were down over 300 going into the open. Really simple. And it's starting to get a little bit complicated. So I want to spend just a few moments talking about that. And that is what happened on the NASDAQ side of things. So believe it or not, you have some problems in South Korea, and it's impacting our markets here at home. Here's what I'm talking about. So last few weeks, I've noticed we've had some pretty good sell-offs, and it's a very, very volatile market in South Korea, but very tech/semiconductor heavy. Okay. We've had some periods here in the last few weeks where they'll go down 4 or 5%, and then the next day maybe 3%, and then they rally 5%. Very, very volatile. But one thing that happened overnight is we had Samsung, which is where it trades, released their earnings numbers, and they were really strong earnings numbers. But the preliminary second quarter results sparked some profit taking. So everyone went, okay, how much better can this get? So we started to see profit taking going on in Samsung Electronics. Then that carried across the board. Now, they reported operating profit that was more than 1,800% higher than where it was a year ago. Revenue came in just shy of what we call some very elevated expectation. But once again, we saw the weakness occur in Samsung, and then we saw it occur in the South Korean market. And then everyone went, whoa, the 10,000 pound gorilla in the room, Samsung's, not quite hitting where everybody wants it on the revenue side, at least. Boy, that's an excuse to start taking profit. So we started to see that profit occurring overnight, taking that in the semiconductor space, memory space, on and on and on. And that just continued throughout the entire day. And then, we started to see some pretty good rotation, obviously out of tech and into other areas like consumer cyclicals and staples and things like that. But that wasn't, really enough to carry us forward. So we ended up with a very small loss on the Dow side, down just 130 points. That was 0.25%. Closed at 52,925, again, after closing above 53,000 yesterday for the very first time. NASDAQ today was down 302, 1.16% pullback there, closing at 25,818. And the S&P lower by 34 points or 0.45%. So again, nothing major. We will see futures. I'm just checking them right now, relatively flat with this news on the oil situation with Iran. But, we'll see what happens and what kind of impact is going to occur tomorrow, if any. I mean, we've seen this market surprise all of us when this oil situation arises. But the day, I want to go back, Corey, on one thing. The day started in regards to Iran. We started to see oil prices tick up earlier today. The U.S. Treasury Department revoked a license that allowed Iran to sell its oil around the world. That's where everything started, again, after Iran attacked these 3 ships. So they revoked the authorization. That upset everybody. And then again, what happened was a liquefied natural gas tanker and an oil super tanker and an unspecified third tanker came under attack in or near the Strait of Hormuz early. We were in bed when this happened. And that's according to the Joint Maritime Information Center, which is a naval group that is led by the U.S. that provides security updates to merchant vessels in the Middle East. So the threat to the ships caused us to do what I said at the beginning of the show, which is we've launched an attack against Iran again. and we will see what exactly ends up happening about this. Again, Central Command saying it was a pretty severe attack. Don't know if it's still going on or if it was one of these where we get in, we bomb, we get out, and sit back and wait and see. But of course, now everything is going to come back to is the 60-day memorandum of understanding. Is it going to hold? What's this really going to mean for the markets and for our relationship with Iran and so on and so forth. So it could just be a one-off event, or it could be something again that lingers for some time. And Corey, you and I both know, you follow the markets closely also, that this could be an excuse to start a bit of a profit-taking route, not just in technology, but across the board.
Yeah, and it seems like it was going that direction anyway. It'll be curious to see what oil does, because the last few times this has happened, oil hasn't really reacted much. A couple bucks, then back down. So,
Yep.
like you said, if it's just a one-off, then maybe it does the same thing. If it turns into something longer term, but I think the president's going to hold tight through the midterm elections, and he's trying to keep those gas prices down. So,
yes,
and Iran knows that they're going to keep toying with him because they know what he's trying to do. So we'll see what happens.
As well as I do, Corey, I've been so absolutely critical of this whole memorandum of understanding the things and releasing billions, hundreds of billions of dollars of funds and so on and so forth. The whole thing has just smelt really bizarre, really, really bizarre. And I mean, you think about it, the guts that it takes for Iran, knowing that, essentially things have been quiet, right? For the last, 2 weeks now. And what would make them turn around and fire on 3 ships just out of the blue? Right. So you're kind of wondering do they really even care about the memorandum of understanding? Do they even care? Or are they going, what, we've survived for thousands of years without the U.S. We can continue to survive thousands of years. You guys can't, we can. So, hey, you know what? Here comes the missiles again. I don't know. It's absolutely crazy to think why they would blow something like that, because they had it pretty good. Like I said, hundreds of millions of dollars, but that's gone. The license to sell, like I said, to the world market, that's gone. I don't know how we control their license. That's something I wanted to research. I didn't get time, but we will see what happens tomorrow. All right. When we come back, we'll hit the commodity side, and then we will begin to tackle our topic today. Again, the top 9 things to look for when buying your first rental property. Welcome back to the John Sanchez Show on Newstalk 780 KOH with Corey Edge Realty. Mr. Millard has the week off. All right. Once again, let's bring up to date what happened in the market side of things today. Bit of a choppy session today. We lost modestly on the Dow side, again, down just 131 points, 0.25%. Nasdaq was the problem child, down 302, 1.16%. S&P lower by 34 points, 0.45%. All right. Once again, on the commodity side, gained $1.93 on oil. Started to see the oil move up throughout the session, and then it peaked out nearly a $3 gain, but since back down just a little bit. But we'll see again tomorrow. Now that we've launched a new attack against Iran, gold lost $10, 4,157.50 an ounce, and a little nasty uptick in the 10-year Treasury, Corey, up 5 basis points. Yield close there was 4.53%. And in the absence of Mr. Millard, we did check the 30-year mortgage, according to Mortgage News Daily, up 4 basis points to a APR of 6.63. Well, a rate, of 6.63%. Corey, before we get to our topic, the 9 things to look for when buying your first rental property, you did a great job last Thursday when we went through the local real estate report. Again, record median price. Hearing much chatter from other people in the profession or clients, et cetera, saying, man, it's got to be a great time to sell. We got these record median prices, or the buyer's going, nope, not going to buy right now. Prices are too high. Any repercussions after those numbers?
No, I mean, it's been kind of a stalwart, right? Like I do think, to me, it just feels like it's still a very strong seller's market as long as you're priced correctly, but there is some control in the buyer. So I just see it time and time again that just because we're at record high prices doesn't mean you can just pick any price and throw it on the market.
Sure.
Because the buyers will absolutely revolt and they won't do anything. But if you price that property correctly or very close to correctly, then you'll get some action and you'll sell quickly. And, I've always told people, and again, people sometimes look at me like I'm selling them, some kind of craziness, but the market will dictate the pricing. If you price it too high, you won't get any action. If you price it too low, they'll bid it up to the market. So what I've tried to do over the last few years is try to get my clients or counsel and be like, hey, let's let the market decide. Let's put it where we think. We tend to hopefully start on the lower side of that threshold, knowing the market will push it up. Mm-hmm. And it just ends up where it's going to end up anyway.
Yeah.
And
market equilibrium.
Yeah. And it's like in your world, it happens all the time. But in the housing market, it never used to really happen that way, but there's so much information. It's so easy. There's so many people like it.
Yeah, I was going to ask you, that's something you've emphasized that point for the last couple of years, but going back in '08 when you joined me on the show for the first time. I don't remember you ever saying that before. It was not that way, but is it because there's so much information and people are coming so well educated to the
Yes.
buying or selling table per se, and the negotiations are like, yeah, you may be asking 720, but I can see on the internet and through comp sales, et cetera, it was 680 is the highest price I'm going to go. Well, geez,
Correct.
how'd they know that? Okay.
Yeah. And I think and it's a good thing. The buyers have a ton of information. They're very
Yes.
smart. They understand how to use it. And it's not like they're going to call you and say, hey, John, you're overpriced. So let me know when it comes down. You just
Right.
won't get any activity.
Right.
They won't do
Right.
anything. They won't, like I said, and I sound like a broken record. In the old days, they'd say, oh, you want 720? I think it's worth 650. I'll offer you 650. They won't even waste their time. They'll wait for you. They'll wait for the market to force you down to 650 if you really want to sell, and they'll do it that way.
Crazy.
So it's super, super interesting, but it's hard for people. It's hard for sellers to believe that because for whatever reason, and I don't know, I can't think of an example in your world where it happens, but you get a person that wants to sell a property and they think that picking the agent will determine the price. Like that agent can sell my house for 300,000 more than everybody else. Like
because that's not marketing. Yeah. Or they'll buy the house from you if it doesn't sell. Yeah, right. Read the fine print on that one.
It's all just pure craziness. Like we're facilitators at this point, right? Like we got to get through, and some of it's very complicated. I told you last week I had a contingency deal where one had to close, then the middle one had to close, then the third one had to close, and so there are reasons you need a realtor in there because all of that can get very complicated if you've never been through it. But for lack of a better term, the market's going to give you the price whether you use me or whether you use the biggest company in the world.
Yep.
It doesn't matter.
Well, the stock market's the same way, Corey. We can all think that we know what a price is worth, but the market will tell you what a stock is worth, plain and simple. It'll tell you what an IPO is worth. It'll tell you everything. And it's a phenomenal forward-looking indicator of economic activity too, right? So yeah, again, back to that old adage that one of my mentors taught me very young in my business or very young in my career. It's like, don't fight the tape, don't fight the market. Just you can't do it. It's too powerful.
Yep.
You just can't do it.
Correct.
Same thing. All right. When we come back, we're going to get started. I promise you this time. The top 9 things to look for when buying your first rental property with Corey Edge of Edge Realty. Welcome back to the John Sanchez Show on Newstalk 780 KOH with Corey Edge of Edge Realty. Once again, we finished with a 131 loss on the Dow. NASDAQ down 302. S&P lower by 34. All right, folks, you're in for a real treat. Corey has put together a very incredible list of 9 of the top things to look for when buying your first investment property. Because, folks, for generations, of course, real estate's been one of the most powerful wealth building tools in America. Rental properties, what do we get out of them? We get monthly income, provide some tax advantages, build equity, and again, hopefully appreciate over time. But again, not every property is a good investment, as you're going to find out. The difference, in our opinion, between a successful rental and a financial headache often comes down to knowing what you should know in the beginning, right? Before you sign anything whatsoever. So again, today we're going to discuss these top 9 things every investor should look for. Corey, I love your first point. Location. Boy, that works in every aspect of real estate, whether it's investment or primary.
It is. And I think it's very important in primary because you're looking at your own personal happiness. In investment, it's important, but I always hesitate a little bit with it because if we take Reno Sparks, for instance, there are rentals in every corner of this county, right? From the high price neighborhoods in Montreux to the lower end neighborhoods, wherever you want to call them, there's rentals in every single one of them. So the location is important, but if you're going to find a tenant in any of them, usually if I say, well, I only want the best location with the best schools, with the best this and that, you're going to pay more for that property while you also get more rent. So what I tend to look at is what's the return on the property. Does that make sense? So I certainly don't want to shy people away from, again, I don't want to pick on a certain area, but I don't want to shy people away from less desirable neighborhoods, if that's what you want to call them, because there's renters in there too, and they could cash flow great and you can have great tenants and you can retire on a property you buy there, 30 years from now. So there's nothing wrong with it. But ideally, the boilerplate tenant typically, not every time, but typically is going to be a young family, going to have kids, going to have children, blah, blah. So that's where you look at the schools and the shopping and the bus lines and freeway access and all those things that would attract what you think is a high quality tenant, but just know you're going to pay more for that property. So you have to equalize the numbers.
I was going to say, so in theory, does it equal itself out? You're paying more for all these amenities you just mentioned, but theoretically you should be getting higher rents. So
Correct.
therefore it's equilibrium. Okay.
Correct. Yeah. Yeah. So that's why it's important. And we'll get into it next, but you want to do these kind of little easy financial worksheets ahead of time, right? Because if money's not an object, if you find a great rental house for $1 million
Mm-hmm.
and you know, hey, I can rent this thing out for $12,000 a month, or,
Mm-hmm.
pick a number, like, okay, those numbers actually work pretty dang good. And that may be a better deal than, hey, I found a smoking deal for 150, but I'm only going to get, $100 a month. Like,
Right.
okay,
Right.
well, you got a better price, but the numbers don't make sense. Like it's
Yes.
better on the bigger
Yes.
deal. So
Okay. Well, let's jump into that second point that you have positive cash flow, right? You're buying this not for, the beautiful front yard. You're buying it for cash flow, appreciation and cash flow. So what do you look for there?
positive, positive cash flow. And there has been times, and I think we're probably in one again now because we were certainly in one in 2006, 7, and 8, where people were sacrificing positive cash flow for potential future equity, and it
Yes.
blew up in their face because they
Yes.
could not
Yes.
afford the negative monthly cash flow. So you need to sit down and make sure it's going to be a positive cash flow. Doesn't mean it has to be $10,000 a month.
Mm-hmm.
Maybe it's only $50 a month. Maybe it's only
Mm-hmm.
100. As long as it's paying for itself, that's the main driver. That if something ever happens to you, the property will continue to pay for itself. Also, it's a good way, John. Like it's not, the right way to say it. It's not a nag on you. So if the goal is to, hey, I'm going to buy a rental property, say I'm 20 years old, I want to retire when I'm 50. I'm going to buy this rental property. I'm going to get a 30-year mortgage, and I want it free and clear by the time I retire. If that's a positive cash flow, you can set it and forget it,
Mm-hmm.
right? Just let it do its thing for the next 30 years. And when you go to retire, you're going to have this beautiful little nest egg. But if you have to feed that every month for 30 years, at some point, something will happen in your life where you want to get rid of
No
it.
more. Yep. Those are the calls you get that say, I can't do this anymore. That
Yeah.
and
So,
bad tenants. Yeah. Those will
yeah,
drive you away.
positive.
Okay.
And don't get me wrong, John, like we're going to do the worksheet. We're going to make it positive cash flow. It's going to positive cash flow for 4 years. And then for whatever reason in year 5, you're going to have to replace something. That's going to be
Mm-hmm.
negative, but then you get it right back on track. So, things don't work as grand as you lay them out to be, but at least start on a good footing.
So I'm gonna summarize the most important thing I think that you just said there, which is do not buy a rental property, especially your first one, on the hopes that appreciation is going to make it a successful investment. Buy it first for cash flow, appreciation, almost secondary in a sense.
Correct. I had a friend of mine. I probably shouldn't even tell this story, but they called me not that long ago, and they were talking about I need some write-offs. I need a write-off. I need this. I need that. I'm going to buy a rental property that only loses. I don't remember what the number was. It's going to lose, $1,500 a month. But I'm going to get the write-off. I'm like, do you understand how mathematics works? Like you're going to lose $1,500 a month, but when you equate that over to your write-off, you don't get $1,500 in write-off. Like you are just compounding your problem by
Right.
doing that. But that's the way people think. Like,
You're right.
trust me, it's much better to have a $15 positive than a $1,500 negative, even for tax reasons.
Mm-hmm.
It's just better. If you're paying taxes,
Absolutely.
that means you're making money, and congratulations.
Yes, exactly. Great point. All right, let's go to number 3, the condition of the property. What are we looking for here?
This is a big one. So there are people out there that are super skilled at fixing up properties, and they're handyman, and they, were born and raised fixing plumbing, fixing this and that. They can look at fixer-upper properties and they can calculate, in their brain, like, hey, this thing needs X amount of work, but I know I can go do it on the weekends. I'm pretty
Right.
smart. I've done it. And they can put in that sweat equity to turn that thing around. If you're not that person, there's no reason you can't buy a fixer-upper, but you need to calculate the cost of the contractor and all the things that come with it. And it may outweigh the discount. If you're getting a $20,000 discount because of the condition, but it's going to cost you 50 grand to get it up to the right condition, then it doesn't make any sense, again, mathematically. So you need to know the condition. And again, what we typically do is we're going to sit down, we're going to do all our financials, our worksheet, because we don't know anything about the property at that point. Then we're going to do the offer. Then we're going to get the inspections. Then we find out, which sometimes means, great, I got to go back to my financial worksheet and tweak some numbers because, maybe this thing's going to need a roof in 5 years and I can live with that if I can make the property work. I wasn't expecting it, but I can work it out because it's still a decent enough deal. So just know what those conditions are.
Right. Yeah, and it can get really expensive. We've all seen that.
Yes.
Especially, the old saying, you never know what goes on behind the drywall or what's lurking
Correct.
there. could be so many different things. So, and foundations, you have that on your list. And yeah, the stories I've heard from friends and clients that foundation problems. I mean, you talk about a nightmare. Oh my gosh. So good point. That's where, like you've always emphasized, Corey, a great inspector is worth their weight in
It's
gold. Not more.
the most important part of the deal is the inspector. And I've had people, and I still get them sometimes. They're like, "No, I really want this house. Just waive the inspections." And personally, I say, "Well, I'm not going to be your agent if that's what we're doing, because the $300 you're going to spend is worth every penny to understand what's
How
happening."
many times have you offered to pay that 300?
I can usually talk my clients into it.
Okay. 'Cause I know you.
So I
you're
don't,
like, I'll foot the bill. If you don't want to spend 300, I will foot it because it's got to be done.
if it came down to a financial reason, like, "Hey, I'm completely stretched. I want it. I can't afford it," then yeah, of course I'll pay it.
Yeah.
If it comes down to stubbornness because somebody has a big
Yeah,
ego, then I'm not
sure.
going to, I'm not going to pay for your inspection.
Yeah.
So
All right. Let's go to number 4, the local rental market, right? People a lot of times fail to do the homework of what's really going on in that specific rental market.
yeah, understand the rental market. Now, we are blessed in Washoe County to have an incredible rental market. Our vacancy right now, I'm just guessing because I haven't looked at the reports lately, is probably running 2% or less. You can usually rent out anything you want. So really the crux of it is, okay, I know I can get a tenant, but how much is that tenant going to pay?
Mm-hmm.
Because if I'm going to do my financial stuff, I need to know what the tenant's going to pay. And I want to be as close to accurate as possible. And maybe even if I think, let's say it's $2,000, well, maybe I'm going to take 10% of that off and only put 1,800 in my financial sheet to make sure it still works, because that's the key. Getting a tenant, not a problem. Getting a tenant that's going to pay top of the line rent. I mean, there's more choices out there now. So you just, yeah, you just want to see what the markets can bear.
So we're going to take a look at things like rental demand, vacancy rates, average rents, obviously tenant quality. You've always been a big emphasis on do a full, quote, background check on that potential tenant.
Absolutely.
Yeah, because again, the whole deal can look phenomenal on paper, but if they don't pay, everything's blown. Everything's blown.
Correct.
So
you
gotta know that. And you've also always emphasized, Corey, checking with references, like past places they've lived.
That's the most important part. And so professional managers, which we'll get into, don't overlook that, but brand new investors overlook it because they look at it as a kind of a burden. Like, oh, I don't want to call this person, and what are they going to do? And it's the most important part of the application, because you need to know, and don't call just one, because that person either might be a friend or might be like, I need this tenant out of here. So I'm going to say whatever you want, call 2 or 3 and make sure it's there. Because it's very important to understand how these people live. You can also usually tell by the amount of time. If you've had, if your potential tenant has moved 6 times in the last 7 months, that might be a red flag to figure out.
Absolutely.
And I was talking to somebody yesterday about this. We're getting more and more people from out of state. The laws are starting to change a little bit. It's very landlord friendly, but not as much as it was. And there are professional, the word just escaped me. The people that move, squatters. Yeah, professional squatters.
Okay. Yeah.
They understand how to get in there. They understand once they're in there that they have rights, and they understand you cannot get them out easily. I did have a client a few years ago who was adamant to do their own management. And they ended up with one of these people, and it was a nightmare for them to try to get this person out of the house. It was horrible.
And for those of you that have or thinking of rental properties in California, you think our rules are bad? Check out how unlandlord friendly California. Come back in our 9 points. We're going to hustle. We've got 4 more to go. We're going to talk about return on investment, ROI, as we like to call it. Welcome back to the John Sanchez Show on Newstalk 780 KOH with Corey Edge of Edge Realty. Mr. Edge, your phone number, sir?
673-6700.
Beautiful. Thank you so much. All right. We've been talking about, again, the top 9 things to look for when buying your first rental property. And again, Corey's been kind enough to cover about 4 of them so far. Location is number 1. Number 2, positive cash flow. Number 3, the condition of the property. Number 4, the local rental market. We left off on my favorite, Corey, return on investment. What are you looking for here?
So again, I like to keep it simple. So positive cash flow will solve all your problems. If you're looking for long-term, then get the positive cash flow and just set it and forget it. Just let the property compound. Let it do what it's doing. We tell the story. We did it on Tuesday when we did the market report, or maybe it was Thursday. 10 years ago, these prices averaged like 120,000. Now they average 600 and something thousand. Let the market do all the work for you. But if you have positive cash flow, it's never going to be a burden on you because it's taking care of itself. And let that be your exit strategy. Just time.
Love it. Well, speaking of exit strategy, that's our 6th point. Let's talk exit strategy.
And this is one you can set up. Again, in my example, if you're 20 and you want to retire at 50, and this is the way you think you can help it, then you're going to have some perseverance to get through the tough times, because you're going to have them over 30 years. But just know that, hey, I'm keeping this property till it's free and clear, and I'm going to use it as a retirement. Perfect. Or,
But like anything, Corey, we should always have an exit strategy, right? If I can't rent it, can I sell it? If I can't sell it, can I rent it? That type of thing.
correct. So
Play it.
remember this: single family houses are usually easier and sell faster than big, huge, buildings. So if you have single family houses, the exit strategy could always be, hey, I'm just going to throw it on the market. I know it's going to sell. I'm not going to have any problems.
Perfect.
And
All right,
so
folks.
that's if you have
Unfortunately,
some.
we're out of time. Number 7 was the right financing. Number 8, property management, and number 9, think like an investor. Corey, these are great points. Thank you so much for sharing them with us.
Sure.
And hopefully, somebody will get off the dime and get out there and get that first rental property. If not,
Yes,
they'll give you a call, let
absolutely.
you do all the work.
I'll
All right,
do
buddy,
it.
Great job as always. God bless everybody. We'll see you tomorrow on the John Sanchez Show. Take care.